you don't make money with strategies that the retail traders suggest, or if you genuinely believe that those strategies don't make sense whatsoever, this video is for you. There's also a bonus tip in the end, so stick to this video. I'm not gonna start with retail BS like candlestick patterns or best indicators. This video is for people that actually want to be to the top 1% of successful traders. Let's get on it. The tool is called VWAP and is major part of my winning strategy. VWAP stands for volume weighted average. Guys, pay attention, because if you understand this well, you will see a drastic and fast progress on your trading. Now let's see the maths behind it first. So we have a sequence like this with 4 numbers. If we want to find the simple average, then we have to do 1 plus 5 plus 6 plus 4 divided over 4 numbers. So we have 16 divided by 4, so 4 is the answer to a simple moving average. Now we will write another sequence to see the difference that it has from the previous one. So the total is again 16, but the weighted average goes like this: 1 multiplied by 1, because the 1 in this sequence only occurred 1 time, plus 2 only occurred 3 times in this sequence, plus 4 plus 5, divided over the times that it repeated itself. So here 1 was repeated 1 time, plus 2 was repeated 3 times, and plus 1 for 4, plus 1 time for 5. So the total of these is 16 again, divided over 3 plus 3, so 6. So the result of this is 2.6 approximately. Do you see the difference here? The previous one said that the average is 4, but now we have a different number. It is 2.6 with the weighted average. You need to understand that those two, even though they look the same, they are completely different. Relating these in trading, we can say that this value over here, 1, 2, 4, and 5, are the price levels in trading on the right hand side. And 1, 3, 1, which I didn't write because the multiple is 1 over here. Then these numbers over here, 1, 3, 1, 1, these are the lots or contracts at that specific price. For example, at price 1, we had traders only putting 1 lot or 1 contract. At price 2, traders only traded 3 lots or 3 contracts. 4, at price 4, 1 lot or 1 contract, and 5, 1 lot or 1 contract. You see that in this price over here is very strong because it had a lot of volume and a lot of lots and contract size, so it's a critical level to know. So the weighted average helps us to know where the market is strong or not and where the traders are trading the most. Now I'll put VWAP and Bollinger Bands side by side to see the difference and the similarities between those two. You can see that Bollinger Bands has also bands, but they measure different things. And now we can go and see the moving average indicator, which is basically 2 lines or 1 line. It depends on which moving average we are talking about. If we are talking simple moving average, it has 1 line. If we talk about exponential moving average, it has 2 or 3 lines. For now, for the purposes of this example, I will use the simple moving average. So we have 1 moving average line that represents the average, and also 1 line on VWAP that represents the weighted average. So basically they look similar in picture, but they are so different because VWAP is more accurate than everything, because it measures the volume And volume is one of the two things that actually move the markets. As mentioned in previous videos, only two things matter in trading, and they are up to date: volume and market price action of the asset that you are trading. This is VWAP, or volume weighted average. We can see there are lots of bands over here. The weighted average line, this is the US opening line for Nasdaq 100, and it's 9:30 in the morning. RV stands for remaining volume, and these are the contracts for each candle that opens until it finishes. For example, I can set it up to 4,000 contracts, 5,000 contracts. It only depends on the asset that you are trading. For example, if you trade currencies have less volume, so you need to set it up to 500 contracts, because this is too much for currency pairs. Now we can see here the volume, and we can see here the popular price of the day that had the most volume, and I put this volume profile on the side because it helps me to see how the profile moves, to see if it's a rotation day or an imbalance day. Now every band you see over here is an additional 0.5 standard deviation. So for example, this is 0.5 standard deviation, this one is 1 standard deviation, this one is 1.5 standard deviation, and this is 2 standard deviations. You might say there's a lot of mathematics, but only mathematics should make sense in trading, and this is crucial for our strategy with VWAP to know where the price is moving and the exact band the price is moving. A strategy with this is that on occasions, it's not always, but likely most of the times, when the volume is above the weighted average line, then you need to trigger essentially a buy, and when it crosses this line and goes down, then you need to trigger sell, because it occurs a downtrend. Despite all the similarities with the looks, they are very, very, very different, because they measure so many different things. Each indicator has their own properties, and also VWAP has their own properties and their own specifications that you can modify along the way depending on your needs as a trader. You can add things, you can remove things, depend on you and your trading style. Drop the retail strategies that don't have any logic behind them and start looking at trading in a more mathematical view, because if you understood my trading style is somewhat based on maths, and you can't argue with maths, they do make a lot of sense. But again, the choice is yours. If you are hungry enough and want to be one step closer to your dream life. Guys, I encourage you to comment down below all your questions, and I'll reply for sure, because your questions can be important for your trading progress. And if you want something more private, you can DM me on Instagram for more questions and I'll reply for sure. Oops, I forgot the bonus tip. The bonus is that if you combine this VWAP with the market profiles from my previous video, it's the most lethal combination to start printing money. Alone is very powerful, but a combination, woof, you are in for a definite success. The combination of VWAP and market profile should look like this, and you can clearly see the value areas, the highs, the lows, and the VWAP approaching slowly those value areas, and also you can see here that they are reacting on them. So now you can believe that this technique is actually concrete and it makes sense. This is very important to prove to yourself that some things work and some things don't work. See you soon, guys!